Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the corporate world one filing at a time. Today, we're diving into Main Street Capital Corporation's latest report, a peek into their financial health and what they've been up to. Let's see if their Main Street is paved with gold or something a little less shiny. This isn't your typical quarterly or annual report. This is an 8K, which means it's reporting something important that happened recently. In this case, it's their results of operations, so we are going to see how they are doing in terms of financials. This report is dated April 10, 2025, so it should give us a pretty current snapshot of how things are going for Main Street Capital. Okay, so under item 2.02, they talk about their results. They issued a press release which is attached as Exhibit 99.1. This press release is where we'll find the meat of the financial information. These press releases usually give you a good overview, but it's always wise to take these with a grain of salt. Companies are always looking for the upside. Looks like Exhibit 99.1 is a press release about the first quarter of 2025. Let's dive in Arctic Infos. So this press release is announcing their financial results for the first quarter, the first 3 months of 2025. We'll want to look for things like total investment income, net income, and earnings per share to get a feel for how well they performed. They are happy to announce an 18.3% increase. It is a comparison between the first quarter of 2024 versus the first quarter of 2025, so we will need to remember to see what the comparison is based on. Total investment income increased a lot during the first 3 months of 2025 compared to the same period in 2024. It went up from about $106.8 million, $26.3 million. That's a pretty big jump, around 20 million more. Net income also saw a substantial increase. For the first 3 months of 2025, it was about $71.4 million for the same time in 2024. That's a jump of over 13 million. They also highlight the net increase in net assets, which shows how much the company's overall value has grown. It jumped from roughly $63.4 million to about $77 million. They also talk about fees. The base management fee they collect from managing their investments has increased too. That means they're likely managing more assets, which is a good sign. The report mentions the company's net asset value or NAV per share. This is essentially the book value of the company's assets minus its liabilities, divided by the number of shares outstanding. Main Street Capital prides itself on paying regular monthly dividends. They've declared these dividends all the way through June 2025 at a rate of 24 cents per share each month. So if you own shares, you're getting a dividend every month. On top of those regular monthly dividends, they're also paying out additional supplemental dividends. They declared 15 cents per share in June 2025. This is a sign that the company is doing well and has extra cash to distribute to shareholders. The press release also touches on new investment activity. They invested in some new companies during the first quarter. This shows they're actively growing their portfolio and looking for new opportunities. They also made what they call follow-on investments, meaning they put more money into companies they've already invested in. This shows they're confident in the potential of these existing portfolio companies. Their total investments at fair value have also gone up. This suggests their existing investments have increased in value or they've added new valuable investments. The report mentions non-accrual investments, which are loans or debt investments where they're not currently receiving interest payments. If this number is high, that is a cause for concern, as it means some of the companies they have invested in are struggling. The report also mentions the weighted average yield on their debt investments. This is the average return they're earning on their loan portfolio. A higher yield generally means higher profits. They talk about their investments in what they call the lower middle market. These are typically smaller companies that are often privately owned. Main Street Capital provides them with financing to help them grow. They also invest in the middle market, which refers to slightly larger companies than the lower middle market, but smaller than large corporations. A private loan is a loan that is not offered to the general public. It's typically negotiated directly between the lender, in this case Main Street Capital, and the borrower, which is one of the companies they invest in. EBITDA stands for earnings before interest, taxes, depreciation, and amortization. It's a measure of a company's operating profitability before taking into account things like interest expenses, taxes, and accounting write-offs. When they mention a portfolio company, they're referring to one of the companies that Main Street Capital has invested in. It's a company that is part of their investment portfolio. Fair value is an estimate of the current market value of an asset or investment. It's the price that an asset would likely sell for in a competitive market. Okay, so what do we make of all this? Main Street Capital seems to be doing quite well. Their investment income, and net asset value have all increased. They're also paying out regular and supplemental dividends, which is always a good sign for shareholders. They're actively investing in new and existing portfolio companies, which shows they're focused on growth. One thing to keep an eye on is the level of non-accrual investments, as that could be a warning sign if it starts to increase. And also, the fact that they operate in the lower middle market and middle market means they're dealing with smaller companies. This can lead to high gains, but also higher risk. Overall, Main Street Capital appears to be in a strong position. They're generating solid returns and rewarding shareholders with dividends. However, it's always important to keep an eye on those non-accrual investments and the overall health of their portfolio companies. Thanks for watching. If you found this helpful, give us a like and subscribe for more deep dives into the world of corporate filings. Let us know in the comments what company you'd like us to decode next.